Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by our Rajhi Bank, Malaysia. It's Thursday and we have our regular Thursday guest, David Kuo, founder of the Smart Investor out of Singapore. David, welcome as always.
And Selamat Tengah Hari as always, yes.
Now, I'm going to come back to you in a bit, but let's first take a look at cryptocurrencies and regional stock markets. Bitcoin is at 20,410.9. It's up 1.59%. Ethereum is at 1,170.78. It's up 3.42%. Now, looking across the regional stock markets, we've got the SGX Straits Times Index, which is up 0.26%. Bursa Malaysia is up 0.16%. Shanghai is up 0.58%. The ASX All Ordinaries is up 0.36%. The Nikkei is up 1.21%. The Hang Seng beats the trend and is down 0.28%. And rounding up the numbers, we've got the Kospi, which is up 2.16%. David, first for a start, what's your view on market performance across the region in the first half of the day?
Well, I think apart from the Kospi, I think most investors are trying to figure out why the American market went up yesterday, even though they read the minutes of the latest Federal Reserve meeting. And even I was scratching my head as to why people are so bullish about shares right now, when all the indications are that there is likely to be more pain ahead for them. So I think people here in Asia are probably a little bit more understanding of what is going on, and they are just sitting on their hands and waiting for something to happen before they actually start plowing into the market again, Brian.
Okay, so David, then for the benefit of the audience, just walk us through the Fed minutes and what the messaging that came out of that overnight.
Well, I think it's pretty clear that the Fed is intent on controlling inflation, come what may. And they said they would need probably more restrictive policies. And restrictive policies probably means higher interest rates and withdrawing more cash from the market. So I think that is the direction that the Fed is going in. It knows it can control inflation simply by stopping people from going out and spending money. So as far as the investors are concerned, we need to be very aware that the Fed is moving in one direction and one direction only. They were also toying with the idea that a 75 basis point increase, in other words, 0.75% increase later on this month, is not out of the question. So when you have a look at where the Fed fund rate is at the moment, and if you add on another 0.75%, that will take us to roughly about 2.5%, which is still nowhere near enough in order to control inflation. So I think we're going to be seeing a lot of interest rate increases from now until the end of the year. But I tell you what, Brian, a lot of people are betting on the fact that the Fed will blink first. In other words, the Fed will see a possible hard landing or a recession, and that it will get cold feet, and it may not increase interest rates. And they're betting that the Fed may have to cut interest rates next year. But I personally can't see that happening, Brian.
So, David, so you alluded to that in your an article you wrote a few days ago on the Smart Investor, where you actually used the word scorched earth. Share your thesis around this, please.
I know, well, scorched earth simply means that what the Federal Reserve is going to try and do is to eliminate any kind of growth whatsoever. If it sees any sign that people are going out there and spending money. I mean, a good analogy, Brian, would be to go and have a look at what happened at the beginning of COVID-19. What did governments around the world do in order to try and control the spread of the virus? And we can probably equate the virus with inflation. Inflation is a kind of virus that finds its way into everything. And so what did governments around the world do, Brian? They locked us all in, right? They stopped us from going out. So it was almost like a scorched earth policy with regards to taming the spread of the virus. And in the same way, I think the same thing is going to happen with regards to the economy. What the Fed will try and do is to scorch the earth. In other words, stop everybody from spending money. And that is the only tool it has, because it can't control the supply side, and so therefore it has to control the demand side, which therefore means that if the Fed can stop me from going out and spending money on buying, say, chicken rice, then of course chicken rice prices will start to come down, because as fewer people go out and spend the money, then of course there will be enough supply of chicken and rice, and so therefore prices can start to come down. So I think that is what I'm trying to sort of say to people, that the scorched earth policy is something that they need to be aware of. And in a scorched earth policy, what you need to do is to find the fittest companies that will survive, Brian.
And where do you think, or what types of fit companies should we be looking for in order to put our money in it?
Well, I can certainly tell you the ones that you should not be sort of looking at: the heavily indebted companies, those that have a huge amount of debt, those who are finding it quite troublesome at the moment, even to, say, make their interest payments, even before they even start about thinking repaying the loans that they have. So those
obviously,
are the companies
what comes to mind immediately is Chinese property companies.
Well, we've already seen that happening, haven't we? And of course, yes, the Chinese government is trying to sort of keep interest rates as low as possible. They're trying to be as accommodative as possible. But I think sometimes even that isn't really going to help, because what you do have is another side of the equation. I mean, there will be economies around the world. Just look at what happened yesterday with Bank Negara Malaysia. They increased interest rates by 0.25%. They have no option. And apart from Singapore, which doesn't really sort of use interest rates in order to control inflation, we're going to be seeing interest rate increases everywhere, Brian. And I do worry for households that are heavily indebted, people who have taken on excessive amounts of loans, and even those people who have remortgaged or drawn some equity out from their assets, their properties, in order to fuel either their lifestyle. That is going to come to an end. And so what the Fed is going to do is to try and drain as much of that water out, the amount of cash out of the system in order to try and sort of control inflation. So really, it's time to tighten our belts, Brian, and that includes companies as well. They need to tighten their belts and to focus on the things that are most important to them.
With those sobering words, thank you very much for coming on the show, David.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thank you very much for tuning in.